Cryptocurrency Academy. Today I'm going to be debunking popular analysis that's going on right now, using the past references from history to understand where we are right now and what to expect. So before we begin, I'm going to be showing some charts, and the charts will be having colors. The color pink will signify a flag pattern, which signals accumulation, meaning that there's institutional buying within the flatness of the area. Green equals final distribution, meaning the final sell-off. The institutions are finally selling their shares. Orange, lack of support. Basically, lack of support means the crash is not supported anymore. It's like a table without its legs. It's going to come down. And then for purple, it's the previous bull market. So we're going to start here with 1929. You can see that, before we begin, there's analysis going on. It's the line analysis. It's very accurate. You see, I have it right here for this video. You see, it's a line, and within this line there are 3 failed rally points, in which the bears believe that the Nasdaq will not push through this line. So, for instance, when it hit here, they would have shorted and it went down. For here, they would have shorted as well as it went down. And for here, on this really big rally, they would have shorted here as it has been going down. Now, we can see in 1929, we have this same pattern. I don't know if you can see it, but I highlighted it in yellow, meaning that's the final shakeout before the final move up. We have the pink, which is the flag, which is the flag, and then we have the green, which is distribution. There's a lot of institutional selling within the green area, which is why the orange area, it comes down very quickly. Now we're going to go to a more recent chart, S&P 500 in the 1960s. So here we have our previous bull market, and before we continue the bull market, which we can see is at a faster pace than the previous one, the previous uptrend, we begin a correction, and here's the line again. It fails to rally at this final point, and then here it goes through, but then it comes down very viciously. You can see it's way different than these candles. You see it gaps down, closes up the low. It's very vicious, and then it comes back up and forms. It begins a new bull run. Here we have 2000. The same thing. We have the line. It fails to rally, fails to rally, fails to rally. Then it comes down very sharply, very scary, and then it comes up, and then it continues the bull market, and then there we have the 2000 bubble. And you can see here we have the flag pattern. It's tight. Basically, institutions are trying to, make people believe that it's going to go down. Like you see in green, it looks exactly the same. They want people to think that it's the green, that it's distribution, but in reality, they're buying. You can see they have a little bit of shakeouts, but in the end, it doesn't breach its 50-day moving average, so it's fine. The 50-day moving average is the red line. So this is accumulation, institutional buying, and then they finally push it up again for its climax top, the green. It's tight. This is institutional selling. And we have the orange, the final drop. There is no more institutional support. This is overextended, and when the institutions are finally out, that is why it comes down very viciously. Alright, so now we have 1987. The 1987 crash, a very bad crash. I think it was called Black Monday because it went down so much a lot. So this is the S&P 500. We can see in purple, we have our uptrend, and then here we have the correction phase. You can see here again, we have the same line with the same 3 points, and then after it breaks out, it has its little flag pattern. This signals accumulations, as I stated before, and then this green signals distribution. Then it comes down again. This could also signal distribution as well, and then it finally comes down once support is finally gone. So let's do a little planner here. So what would we do when it breaks out of the line? First of all, stocks will begin to go up, so you can start getting your positions, your options, contracts, etc. Now, during the pink and the flag pattern, you would sell and buy more. You would upgrade your position and get bigger positions because, as you can see, there's usually shakeouts. And if you're an options trader, then you know that during shakeouts, the option prices will be cheaper because nobody wants to buy calls when it's going down. And then here, it goes back up, and then in the green area, this is optional. You can short here, and you can see that you'd make a lot of money from shorting based on the orange. You see, and there was a trader, Jesse Livermore. I read him in a book, Reminiscence of a Stock Operator. If you wanna learn about investing, you want to be really good at investing, I suggest you read that book, Reminiscence of a Stock Operator. I'm pretty sure Jesse Livermore, the man of the book, he shorted the Great Depression and he made a lot of money. They called him the boy plunger because of that. Anyway, let's get back to right now. So this everybody believes that we failed to rally above the line, above resistance, and thus we're coming down. We have gaps that we have not filled yet. You see? And we have this very sharp decline day. I think this day was down 4%, 5%. Very scary day though. And then here we have a little green day. And then on Friday we had another red day. We've went below the 50-day moving average and the 65-day moving average. So everybody believes that this is because of the new economic data that is being shoved at them throughout the mainstream media. The news is telling them so many things about the economy. Something. Biden. I don't want to get too political, but Biden he says something about the Republicans, and everybody's scared. Has everybody thinking there's going to be some sort of civil war or something? I don't know. The recession fears, inflation fears, etc. Now, I'm gonna make a video about the media, the news, and investing, and how it's usually the opposite. But basically, this is a shakeout. Now, this is seen as a humongous sell-off, right? Well, we're gonna look at the volume to see if volume supports this whole down move sell-off thing. And I'm on Investors Business Daily right now, and we can see that volume is below average. We've had a volume dry up compared to this big rally, which was on high volume. So this means that the rally was actually stronger than the shakeout. If this was a big sell-off and we were about to enter an economic crash, volume would be very high for the selling part. But instead, the rally has higher volume than the sell part, which is why I believe that this is not a sell-off, it's just a shakeout, a final shakeout to scare people. And after the shakeout, I believe that the Nasdaq will just push up. That's what I've come with my research and analysis. Okay, so after the shakeout, I believe that we're gonna come up. So we've had a rally, and the rally was on a higher volume, meaning that the rally was very supportive. It was supported by institutions, and compared to lower volume selling. This tells us that institutions they're selling, but not as much, not a lot. It's really just the shakeout. Sure, it's closing at the low, right? But it's still in low volume. you need to understand that volume is very important. Do not underestimate volume. It's very important. It really tells you a lot of things. Okay, so we'll do a final review on the whole thing. You see, you have the line. It fails to rally. Fails to rally. Finally rallies, and then it goes up. Accumulation, and then it goes up again. Distribution. If you want, you could short here, and then during the crash you would make a lot of money. Here we have again the line. Failed to rally. Failed to rally. Failed to rally. Failed to rally. Intense shakeout with closing at the lows and even gapping down. Then it finally comes up, and then goes up a lot. Former uptrend, and the line failed to rally, failed to rally, failed to rally, rallies, goes up. Distribution, accumulation, distribution. You could short here, and then you can make money off the crash. The previous uptrend, the line failed to rally, failed to rally, failed to rally. Accumulation, distribution. You can short here, and then you make a lot of money from the crash. So yeah, that is my analysis. My most recent analysis, and as far as I'm aware, I don't feel the need to do any more research for this stuff. I feel that my research is done, and this is all I need. This is the final thing. And if you believe in my research, then that's nice. Thank you, and be sure to like and subscribe. That would really support me and make me very happy. I will make a further video in maybe in a couple of days, talking about how the news has a history of lying to people with the stock market. I'm not a conspiracy theorist. Don't think I'm one. Just telling you the facts based on history. History repeats itself. If you wanted to read that book, Reminiscence of a Stock Operator, be sure to do that. Very good book. Thank you for watching this video. Be sure to like and subscribe.